Well, today I am talking to Paul Herbis of Equity Institutional Services, and we're going to be talking about self-directed IRAs. So I'm really excited to be talking to Paul. Paul's an expert at what he does, and we're going to learn a lot today from Paul. So, Paul, welcome to the show, or the podcast, or my YouTube channel. I've done this in different ways, but welcome. I'm, looking forward to our conversation. Why don't you take a minute to introduce yourself and tell everybody who you are and what you do?
Yeah, thank you very much, John. Really appreciate the opportunity here today from you and Alpha Dog Capital, and very fortunate to go ahead and be discussing self-directing IRAs and the like. A little bit about myself. I find myself in Sioux Falls, South Dakota, where we're also chartered with the South Dakota Division of Banking. I've been doing this long enough to where I worked for a former entity known as Midland Trust, now known as Equity Institutional Services, where we were acquired actually in August of 2023. A little bit about myself, John. I love helping people defer taxes, whether it's in an SDIRA or 1031 exchange. It's really something that I'm passionate about, is helping real estate investors keep more in their pocket so that they can continue to reinvest and really go ahead and build that wealth momentum snowball.
Yeah, that's great. So, how long have you been doing this? You mentioned a couple of companies, or the company that you're working for got bought out, and so you're with a different company, but really the same company, however you want to look at it. But
Yeah.
how long have you been doing what you're doing, or been in this space?
Yeah, I've been in the trust field now over 3 years, John. My previous experience has come from a myriad of industries. So I used to be a sales manager for a computer company. I used to go ahead and lead 6 different sales teams for a construction firm back in Minneapolis, Minnesota, and was previously a football coach in another life.
Oh,
So
wow, cool.
um, a lot of different areas that I blended from, but I'm very fortunate to have found myself at Midland Trust, now Equity Institutional Services, an equity trust company family. So I've been doing this now for over 3 years.
Okay, that's fantastic. So, do you do more than self-directed IRAs? That's what we're going to be talking about today, but it sounds like I'm reading between the lines here a little bit that you have more to offer than simply self-directed IRAs. I'd like to dive into that just a little bit, and then we'll get on to self-directed IRAs.
Definitely, John. So while self-directed IRAs are a portion of what we offer, we certainly offer many other product types as well, such as a checkbook IRA, which is going to be an IRA that owns a single member LLC outright that can be used for investment activity, as well as a 1031 exchange, right? A way for investors to go ahead and sell their investment property and reinvest into another without needing to create a capital gains taxable event. And then I'll also go ahead and help assist with solo 401ks as it applies to going ahead and ensuring that those self-employed business owners with no common law employees outside of a spouse can also have access to those self-directing investments such as real estate.
Okay, what you just said, the last thing you said really is catching my attention. So I want to make sure I understood what you just said. So a solopreneur basically that has a 401k in their own business without employees
That's
can
right.
do that?
That's
Okay, that
that's
I didn't know that.
exactly right.
Okay.
So it is a great vehicle for those who are looking to go ahead and make that investment. If they, once again, don't have any common law employees, an important part of that, and the only one is able to be a spouse. The most common type of investors I see that are solopreneurs are those who are practicing members. So maybe they own a private practice and they're an MD, or maybe they're a dentist or practicing psychologist or attorney. Very common fields that I will see a lot of those solo 401k investors come out of.
Okay, got you. Okay, well let's get back to basics. And what actually is a self-directed IRA? What are
Yeah,
we talking about here?
good question, John. So a self-directed IRA is similar to any other type of IRA. The term self-directed is a marketing term through and through. Really, the key difference is going to be who is actually being the custodian of the account. And no, I don't mean a groundskeeper or somebody helping to take care of a facility. I'm talking about a bank, which is what we are on paper. So when you are looking to go ahead and self-direct an IRA, it's very important that you choose the right custodian, because there are many custodians out there who advertise these self-directed IRAs, but they allow you to self-direct into 8 of their own mutual fund offerings, not into things like real estate, private placements, and the like. So that self-directed IRA term is truly a marketing term. Really, what individual investor would want to go ahead and find is an entity that specializes in alternative assets that can go ahead and get them into their end investment. So truly, when we're talking about self-directed IRAs, what a real self-directed IRA is that can go ahead and get into a real estate investment, we're speaking about an IRA that lives at a custodian that does have the administrative feasibility to get that investor into that offering. There are many custodians out there that you might see advertised at like the halftime commercial of like a Super Bowl or something to that effect. A lot of those larger custodians can concern themselves with assets under management, AUM. They want to go ahead, get you invested into their mutual fund because it's where they make their revenue. Where we're concerned with assets under custody, we want to go ahead, be the bank, provide that custodianship that the IRS requires for every IRA investor, but ultimately give those investors the freedom of getting into that asset class they want.
Yeah, that's fascinating that you call it a marketing term, and I've thought about that for a while, and I've talked to a lot of investors that think they have a self-directed IRA, but I call it, I don't know if this is an industry term or something I ran across or I made it up myself, a self-managed IRA
Now we're
within
talking.
that bucket of opportunities that they're limited to, which is
Mm,
traditional stocks and bonds, basically, the Wall Street investments. And people don't understand that this whole world of alternative investments exists, and they cannot use their traditional IRA to invest in these things unless they set it up properly with a company, a custodian like your company. Uh, am I saying that in a way that makes sense? Am I accurate in the way I'm talking
yeah,
about this?
well said, John. I mean, that's really it. At the end of the day, you want to make sure that you're partnering with the right entity to go ahead and get you to that end investment. And great call out with the self-managed. That's really what it is. They're just choosing where to place it, right? Within their limited scope of mutual funds, where a true alternative asset custodian would be able to go ahead and get you into any of those alternative assets that you seek to invest into. And as you mentioned, John, I mean, this is something that a lot of investors are unaware of, but it's been going on since the 70s. I mean, we're talking over a 50-year timeline that investors have went ahead and self-directed their IRA funds, which makes it very timely. I mean, a lot of investors have been doing this, but as you mentioned, there are many who are completely unaware.
Hmm. So the typical client that would come to you, are they somebody that has already knows they want to open up a self-directed IRA because they've been educated about it, or is it more that you're educating people and they're saying, "Wow, I didn't know that this existed." What's kind of your personal experience as you're out there doing this?
Yeah, good question, John. So most investors, by far, it's their first time ever going ahead and self-directing IRA funds when I go ahead and speak to them, either on a Zoom call like this or over the phone. It's something that maybe they've heard about from a friend, maybe one of their buddies did it, but it's something they have no idea of. And really, I seek to understand what they're trying to accomplish, right? So I'll go ahead, try to understand their goals, their concerns, what they're really after. And then, of course, speak to those rules, speak to those regulations, speak to those pitfalls to ensure that they are on the right track to go ahead and achieve those goals with their retirement funds.
So when to play devil's advocate a little bit, okay? Because I'm aligned with you, but I think some people might be listening and thinking, "Oh, these alternative that's an alternative investment world. This is kind of shady and risky and high risk." And for people that don't understand this world, they don't understand the opportunity that is there. Yes, there are risks that are different than investing in Wall Street, but it's not really your money's safe on Wall Street and totally at risk in alternatives. There's a lot of nuance there, and maybe you could speak to that and the responsibility that a person has once they get a self-directed IRA. It's on them to make smart decisions.
That's right.
Yeah, can you speak to that for a
Certainly
few
can.
minutes? Yeah.
So I've seen many different investors over this past year move from Wall Street into Main Street, right? Go ahead, move from their publicly traded portfolio and into hard assets like real estate. Even if you follow along into some of the recent news, I mean, even Michael Burry is going ahead now and shorting AI, right? He's going ahead and taking $1 billion short on a few different AI companies because he believes those publicly traded stocks are overvaluated and they're overinflated.
Mhm.
And he's not the only one with that sentiment, right? That sentiment is something I hear time and time again when I'm on these phone calls with different investors is they don't want to ride the roller coaster. They don't want the highs to be so high and the lows to be so low, right? Because there is certainly a risk involved in the public market. There wildly is. Self-directing into hard assets like real estate that can appreciate, that can go ahead and have the opportunity to grow your retirement portfolio without taking the roller coaster ride of the S&P 500 is certainly of interest to many different retirement fund investors that I've met with over the past year. Um, sure, there may be a connotation that private equity investments contain more risk, but at the end of the day, they typically contain much more reward, which makes them attractive in the first place. There typically is a much higher potential for return. Um, and like anything, there's no guarantee in life, John.
Yeah, yeah, absolutely. The other thing about alternatives is, real estate definitely is this way. I can't speak for all alternatives, and I think most of them are, though, this way. They're not correlated with the stock market. So the stock market moves in its own direction, and an alternative, the real estate industry, is not correlated. If, stocks could go way down and real estate prices could go up, and vice
Right.
versa. Yeah. So, yeah.
A very common way, John, as well, for people to diversify their portfolio. Let's say an investor has $1 million. I mean, if they're in the S&P 500 with all $1 million of retirement funds, all their eggs are in that same Wall Street basket, right? And
Mhm.
that's where I'll see a lot of people go ahead and start peeling away some of those funds and investing them into real estate. Maybe taking a quarter or half of that portfolio, using it to invest into a hard asset. That way they're diversified. That way, if anything did happen on Wall Street that would surely affect many Americans, it wouldn't necessarily affect them nearly as much.
So, in your experience, when you see an investor doing this, moving from Wall Street to Main Street or diversifying a portion of their portfolio, do you see like a typical allocation that they move into alternatives? Is it 10% of their portfolio, 50% you mentioned? What kind of activity do you see?
Yeah, I would see people take a bite of the elephant at the time in my experience, right? So I'll typically see anywhere from like a 10 to 15%, maybe 10 to 20 originally. But then after they make that first private placement, after they see success with it, after they start seeing those dividends come right into their retirement account without needing to pay capital gains tax on them, they typically tend to make another investment, right? And they typically tend to expand that portfolio of alternative assets, and then start to go ahead and grow that allocation.
Yeah, yeah, excellent. And what when investors invest in alternatives through your company, uh, there's no limitation on the asset class. Is that correct? They can, if they
Great
want to
question.
do whatever windmills, they want to invest in a windmill project in Ohio or something, crazy
Yeah,
thing,
you could
So
could could certainly invest in a windmill project. There are going to be a few things that are off the table when it comes to IRA investing. One of the first ones is going to be life insurance. Not able to make a direct investment into life insurance as corporation stock as well. Anything federally illegal, so cannabis, marijuana right now would be exempt from an investment with an IRA, and then any collectibles, because the IRS isn't able to put a price tag on it. So a hot rod from the 1950s, unfortunately, you can't use your retirement funds to buy it. But if we're talking about private placements, real estate syndications, purchasing a hard asset, all possible through that IRA, most certainly.
do most of your investors invest in real estate, or do you
Yes.
see some obscure types of alternatives that people invest in? I'm just curious, have you
We
seen
see
any wild, crazy stuff out there?
we see some wild, crazy stuff from time to time. in terms of the most popular, I would say it would be either real estate property or a real estate syndication, a private placement. Outside of that, I would say it would be venture capital, private equity based. Um, safe safe notes are also very popular as well. Um, and secured notes too. But those, of course, are I would consider a secured note backed by real
Mhm.
estate a real estate investment. I mean,
Mhm.
that's what I would consider it. But those are very common. Now, when it comes to some of those obscure investments, we've seen them. Uh, I've seen and worked with groups who will actually go ahead and um, wholesale um, bourbon, right? And actually keep it in Kentucky so that it can still be classified as bourbon and then go ahead and actually resell it, make a profit on it. So there are some very obscure ways that I've seen individuals go ahead and structure some of these private placements. That's for sure.
Yeah, yeah. I tell the investor that I talk to that are new to the world of alternatives that you know, it's best to avoid those asset classes that they're not familiar with,
Right.
that sort of thing. And everybody knows real estate, so because everybody lives somewhere, so it's an easy. I think it's the easiest alternative asset class for people to understand, and it's the number one. You just verified that by your own experience. That it's really the number one alternative asset for people to get into uh, when they get into the world of alternatives, and they do that with the self-directed IRAs as well.
I would completely agree. I mean, real estate is something everybody can wrap their arms around, right? And understand and start to comprehend and start to study and learn, right? Now, um, I do understand Web3 and some of the cryptocurrency things, but it's still very foreign to me, right? Not that I'm against that asset class, but at the end of the day, I would completely agree with you that real estate is a very, very popular choice.
So just to emphasize this point, you as the custodian, your company as a custodian, doesn't restrict the investor from investing in whatever they want, as long as it's a legitimate private placement and not one of the
Yep,
prohibited asset classes.
that's exactly right, John.
Okay, so there's like 100% autonomy that the individual investor has. So what are the typical steps? What does it take for an investor to open up an account with you? Is it pretty similar to setting up an IRA with the other types of companies that are out there with the limited investment opportunities?
Very similar. Very similar. So we're talking about a three-step process, John. We're talking about going ahead and creating the account, very similar to any other custodian. We're going to ask for your social, your mailing address, your personal information, your driver's license. We're going to verify your identity, make sure everything's legitimate. We want to make sure everything's above board as a custodian. It's our very, very top motive is to ensure that everything's being done above board. After that account is established, we would then go ahead and assist that investor with the movement of funds. So similar to any other custodian, we'd help them either roll over their funds from a 401k or help them transfer their funds from something similar like another IRA at one of those custodians, and then we'd help them fund the investment. So we would go ahead, send them over the subscription agreement. For instance, if this is a syndicated deal they're going to be investing into, they would endorse via DocuSign, and then we would ask them to call in for their verbal authorization. After that's been completed, we'd send a wire. They'd be fully invested.
And so do they have an online platform where they can how do they tell you what's the mechanism for saying, hey, I want to invest in this apartment syndication in Kansas City? What action do they actually take to make that happen?
Yeah, John. So they will have an online client portal. Similar to many other custodians, it's where they can grab their account statements, make contributions, take distributions, and manage their transactions effectively. So they would have 24/7 secure online access to go ahead and manage that SDIRA and the investments of their choosing. Now, say they wanted to make that investment into the syndication, all they would need to do is go ahead and reach out to me to make sure that we've onboarded it and we have it custodied. So that is an important part of the equation is we want to make sure that we hold custody to the asset that they want to invest into. So what we would do is ensure that it's on our platform. If not, I would reach out to the investment sponsor, have them provide their EIN, their subscription agreement, and then their wiring instructions as well so that we can get the investment funded.
Okay, so that's another end of this whole picture. Let's talk about that for a bit because it's interesting. I went through that process with you. I think I provided everything that you asked me for. Um, but so there's an opportunity for investment companies to basically sign up with your company. What I don't even know what that's called. What I did. You just said the phrase, but I'm not even sure what that's called to get set up so that investors can invest in those funds.
Yeah, so our investment onboarding form, John, is what we're going to refer to it as. I'm sure every custodian has their own name for it, but it truly ensures we can hold custody of the asset. So we ask for it to be completed for every single offering that we hold custody to. So it is an important step that allows us to actually hold the asset on our books and get those funds wired over.
Okay. So, so the company, the syndication, for example, needs to have that paperwork on file with your company
That's right.
before that investor can invest in that
That's
fund.
that's exactly right. We'll then use the subscription agreement and we'll go ahead, send it via DocuSign to the investor, have them countersign, and then get that endorsed agreement back over to the investment sponsor.
Okay. So that you've taken out a lot of friction in the process. It seems like a very smooth process to one, get set up with you, and then two, for the investor to deploy their capital into an investment vehicle.
We're here to help, John. I mean, really, that's my role here within the organization is to ensure it is a frictionless process, not only for the investment sponsor, but for their investors as well. So we're always willing to go ahead, have that conversation, learn more about their goals, and do any additional handholding. I mean, just this morning, I was able to go ahead and pre-fill some applications over the phone and make things easier on those limited partners, and that's what we're here to do, is to help remove that friction and help people and empower people to get into those investments where they can see those greater returns into the private equity world and really be able to go ahead and get to where they want to go with those retirement funds.
Is there a minimum dollar amount that your company requires for an investor to set up an account, a custodian account?
$250 is our minimum.
Okay, so basically everybody can do that.
I
Uh,
haven't ran into an issue with it yet, thankfully.
yeah, yeah. The challenge is the investment opportunities that are out there. Private placements and
Right.
alternative investments tend to have a much higher threshold of getting in. In my my world. I One of my friends runs an apartment syndication, and he has the lowest share price of any syndication that I know of, $10,000 a
Oh,
share.
wow.
And I was
That is the
surprised.
lowest one I've heard of too.
Yeah, yeah. So, but anyway, it's working for him. He does a lot of
Amazing.
family and friends type of. It's a 506 B fund, but
Nice.
anyway, yeah. But I see them at 25, 50,000, 100 or more.
Right.
What do you see typically in a real estate fund? What's the minimum investment that's required?
Yeah, what I'll typically see on the private placement memorandum is 50,000. I think that's the most one of the more common levels for private equity. Real estate investments with those syndications is right around 50,000. But I will see those who are at that $100,000 threshold too. That being said, that's what's listed on the document, right? Now, these groups will certainly make exceptions for for investors, right, from time to time. So even though $100,000 is listed on the PPM, I've seen groups take $25,000 investments before from individuals. So, wanted to make sure to give you the insight, John, that I see on my day to
Yeah.
day, and give you kind of peel back behind the curtain and take a look at Oz.
Yeah, yeah, that kind of aligns with my experience too, that if an investor doesn't have, let's say, at least $50,000 to deploy into alternatives, and that first of all should not be, all their money, uh,
Right.
you know, uh, but a portion, it's a diversification strategy. So I
That's it.
run a 506B fund, and I could take in non-accredited capital. And I haven't really done that yet, but I can take in
Mhm.
non-accredited capital. Uh, but I imagine most of the investment, the private placements that you deal with are for accredited investors only.
I'd say there's a good blend, John. I really would of 506B and 506C. Um, I'd say there's a fairly good blend of either. A 506C it does take a little bit more legwork with attorneys, and there is more cost involved. So I do sometimes see that as a barrier to entry for different general partners, but really, I will see a melody, John. I'll see 506Bs, 506Cs, um, both, truly.
Okay. Yeah, that's interesting. Yeah. I didn't most of the people that I know that have like a hedge fund or a private placement, they're 506Cs and they're
Mm.
out there raising money and marketing. And then I have a group of other, associates that do 506Bs, and we're pretty quiet about giving out the details of what actually
Right.
the investment opportunity is without that personal relationship. But that's interesting to hear you from your end talk about it because you're on that end of it, and so you'd say it's pretty even then
I
between
would. I
both.
would. I mean, there are many 506Cs who, of course, have the ability to go ahead solicit to the public, right? I mean, that's the greatest advantage of the 506C as compared to the B is just the ability to solicit. But that being said, I mean, there are plenty of very successful, um, wonderful fund managers who are leading 506Bs who just don't want the headache. They don't want the headache of going to the public space. They they have great relationships with their investors and they're very comfortable continuing to do 506Bs. Um, so really, we'll see the melody over here, John.
Yeah, yeah, that's great. Um, Paul, is there anything that I have not asked you that you would like to answer or
Sure.
mention?
Yeah. Just in regards to SDIRA investing, the tax advantages, right? I mean, when you're going ahead and
Yeah.
making this investment, you're not paying capital gains taxes in your return, and that's a huge benefit. I mean, a truly stark difference if we're talking about just investing with personal cash, right? Is the ability to avoid that capital gains taxes. And then something else I wanted just to highlight on quickly, John, is job changes. I mean, that's one of the more frequent reasons I get a phone call is somebody leaves their current employer because once when they do, that former employer 401k becomes active to them. And they can now roll it over and start investing into those private equity opportunities and start self-directing their IRA funds so they can see the returns they want. So also wanted to highlight on that job change piece, really helping catalyze and leading investors to self-directing once when they do have direct access to those former employer 401k funds.
Yeah, Paul, that's great insight about job change. Let's talk about that a little bit more so that people understand that. So, uh, the 401k, their retirement funds are locked into that particular fund that their employer allows them to invest in. But once they leave that job, those funds become immediately available for their own IRA account. And a lot of people don't realize that, I think, or they just leave it behind. They know, oh, I have a
That's
401k
right.
there, I have 401k there, I have 401k
That's
there.
right.
They've got four, five, six 401ks floating around. Is that kind of the world that you live in when you?
Very much so. So
Okay.
what you're describing, John, is very common. So within the past 20, 25 years, I mean, job hopping's become very more frequent. I mean, people will go ahead, change industries, leave their employer, typically now on average every 3 years, right? So there are people moving from job to job, and as they do, they forsake that 401k account. They forget about it. They become busy with the shuffle of life. Thanksgiving was last weekend. Things come up, right? So
Mhm.
um, it's very important to make sure you're actively managing those, that they're not just sitting into a mutual fund that you have no idea where they're invested or handled by a financial advisor you have no tie to or don't know the name of, right? So really taking a moment to go ahead, identify what's sitting out there, what capital can be used to invest into real estate that is currently just forgotten about and left behind.
Yeah. Yeah. Well, Paul, I definitely want to talk to you again, soon. I do run a meeting, a meetup group, where we talk about real estate investing, and I was doing it live in person for years. I stopped about a year ago, but I'm restarting that. So I'm going to have you come on when I've got, on a group call, and I think you'll get a lot of questions from people in the audience. And my typical meeting size is anywhere from 20 to 50 people. So
Awesome.
that would be great. I think you have a lot of great content to share and educate people about. And I'm going to to put your contact information in the notes, the show notes, the video description. So just make sure. I think I have your correct, name, phone number, email address, all that. I'll put that in the show notes and uh, give me the best link that you want me to put there because it's a clickable link. Maybe just shoot me an email about that.
I
So
will do. I will do, John, and would love the opportunity to continue to educate and help solve those questions. I mean, that's what I'm here for. People have questions, I'm here to solve them, and I just want to be a reliable resource for them and give them their options. That's really my role. And once again, John, thank you very much.
yeah, you're welcome.